Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretksy. He's a Vancouver-based realtor, online at stevesaretksy.com. Welcome back to the show, Steve, and Happy New Year.
Yeah, Happy New Year. Thanks for having me on.
Steve, is the December 2020 edition of the Steve Saretksy Report out yet? What's in it, and where can people read it?
Yeah, I think by the time this interview goes live, we should have it out. So, just a monthly report, in-depth sort of coverage on my thoughts on the housing market here. But you can just check that out on my website, stevesaretksy.com, and it's free every month.
How are December sales and price figures looking for housing in the low end to the high end?
Yeah, we set a new record for the month of December. For the month of December, we had record sales up 54% on a year-over-year basis. And, that strength is pretty much widespread. So we had record sales in the condo apartment segment, and the detached segment, I think, was just below the 2015 high set in December 2015. Of course, we know what was happening back in December 2015. We had probably 30% year-over-year price growth. We had, loads and loads and loads of offshore investment coming in, and obviously a very much a speculative fever back then. So, today we're kind of sitting right near the same sales levels as 2015. We actually have inventory levels that match 2015 in the detached single-family market. So you basically have the lowest levels essentially on record that we've ever seen. And obviously that's creating significant price run-ups in certain segments of the market.
Did we end up having a delayed spring-type market in the fall of 2020?
Well, I think like the initial narrative coming out of the lockdowns in May was, the pent-up demand, and I think that was justified at the time, and it certainly made sense, and I think it was a real thing. But we're 8 months here past that. We're 8 months through this recession, pandemic. At some point, I think we have to drop the narrative of pent-up demand and just assume that, the data is what the data is, and the data is clearly pointing to, in my opinion, is a bull market. Whether or not the bull market will continue and or for how long obviously remains to be, seen. But clearly, again, we're 8 months through this thing. We're setting record sales here in December. If you look on a national basis, just get your head outside of Vancouver for a minute. If you look on a national basis, you'll have record home sales for the entire year. So 2020 will see record home sales across the nation, which is pretty impressive when you consider the fact that, the housing markets were shut down for about 6 weeks, and you're in a pandemic, and you're in a pretty severe recession where, your unemployment rate today is back up close again to 9%. So I think by all factors considered, you kind of have to look at it and say, well, that's pretty impressive. Again, we can discuss the merits of that, and we can discuss why it's happening. And it might not seem rational, but the numbers are what the numbers are. And so, I prefer to be data-driven than emotion-driven.
Mm-hmm. So why is it happening?
Well, I think that if you look at what's happening, I think that the market, clearly part of this is emotion-driven, so people are looking to upsize. They're spending so much time at home that everybody wants a bigger space. People are, you talk to any sort of contractors, renovators, everybody is wanting to upgrade their home, so they're spending money on renovations, home office furniture. You talk to any sort of, go try to order a fridge or dishwasher right now. They're all on back orders. So people are spending an insane amount of time, obviously, at home, for one. And number two is, if you just look at what's happening, is the reality is that the Bank of Canada has more than tripled their balance sheet in a massive QE program. You have 5-year fixed mortgages today at about 1.5, 1.6%. And, you have a federal government that's run a $400 billion deficit where the value of the currency, I think you just have this, a currency devaluation. All you have to do is, again, I prefer to look at this on a more broader scope and say, okay, what's happening? Forget the Canadian housing market. That's just a small segment of financial markets. Let's look at everything that's happening in financial markets, whether that's in the U.S. stock market, whether that's in Bitcoin, or whether that's in, Canadian real estate. I mean, pretty much all segments of financial markets are doing extremely well. And again, I just look at that and say, liquidity has been pumped into the financial system, and where's it going? It's going into financial assets.
Do you expect this housing market to continue this year?
I think that, I do. I think that, if you look at it, you look at what policymakers are doing, that the Bank of Canada has made a pledge. They've come out and told you that they're not going to raise rates until at least 2023, that they're going to continue their quantitative easing program until the recovery is, quote, well underway. So as long as that monetary stimulus remains intact, and I certainly don't anticipate any sort of pullback on the federal government side, I don't see the Trudeau government suddenly having a change of heart and reining in this, free money that they're showering households with. And so I think that the fiscal and the monetary stimulus is going to remain in place. And I think that, as long as that remains in place, you now have a housing market that has momentum. You've basically come out and you've had this one directional trade for the last 20 years where Canadian housing only goes one way, and that's up. And so that's been ingrained in people's mindsets. And now we were faced with this pandemic/recession. Everybody assumed, myself included, that prices would fall. And they haven't. And so now I think you're creating this speculative feedback loop where people feel that they're justified in continuing to speculate on housing because the government or policymakers, they'll always have our back. And so, unfortunately, these are just the repercussions of these policies. I mean, there's no such thing as a free lunch. And that free lunch is going to come in the form of higher house prices and, continued lack of affordability in housing.
We'll have more with Steve Saretksy right after the break.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Steve Saretksy. Steve, are the lockdowns causing pent-up demand for both buying and selling?
I think that maybe we had some initial pent-up demand on the buyer side and the seller side even coming out of the May lockdown. But I think now what we're seeing again is just, I think kind of the beginnings of that bull market. And, again, we're seeing buying, purchasing, obviously at elevated levels. You are seeing some, listings, at least in the condo market, listings are at elevated levels, but they're being offset by record sales. And so that's kind of keeping inventory relatively in check. And, at least if you look at the condo market, it's been pretty much a flat to down market, since the onset of the pandemic. So it really hasn't enjoyed the fruits of the, liquidity flowing through the market just yet. We'll have to wait and see if that, starts to change.
Could Canada end up like Japan with low interest rates for a long, long period of time?
I think I've been on your show numerous times discussing this, that, there is no segment of society today that can actually tolerate higher interest rates. Unfortunately, there's also no such thing as free markets, as we've so evidently seen during this pandemic, that it's quite obvious what the next step is that you have to pin rates to the floor, and you have to try to generate inflation to basically inflate away the debt. So whether or not we get inflation or not, I still am in the strong view that real interest rates cannot and will not be allowed to rise. And so if that means the Bank of Canada's balance sheet goes from today owning 35% of the government debt to 50% to 75%, and eventually to Japan, where essentially there is no, the JGBs don't trade. The government, essentially the bond market becomes nationalized. And so you're basically removing one of the largest segments of the financial markets, is that the bond market essentially disappears and it becomes nationalized, and the only buyers are central banks. And I think that is partially why, and this is what QE is designed to do, is just to push people out on the risk curve and into more speculative investments. And that's why, again, you're seeing the growth in real estate, and you're seeing the growth in things like Tesla and Bitcoin, and because people are forced to speculate. That's what QE is designed to do, and I think that will continue.
We'll have more with Steve Saretksy right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretksy. Steve, with all the money printing going on in Canada, is the real estate market likely to benefit from it in 2021?
Yeah, I think so. I think that's just, again, continued QE until the recovery is well underway. And obviously we know what's happening, as, you're seeing the reports obviously coming out. Canadian banks flush with cash. Where are they putting that money? Where is their loan book growing? It's growing in the residential mortgage credit space. They're trying to get money out the door. And, so they're aggressively competing for new borrowers. And again, that's a part of the strength in the housing market. At the end of the day, real estate is driven by credit availability. It's the access to credit that supports the valuations. And if credit pulls back, then the value of real estate will pull back. But as we've seen here from the top down, is that they've encouraged the banks to continue to lending, particularly into the residential real estate market. Credit growth is accelerating faster than it was pre-stress test, and that's why you have record sales in 2020.
Are people trying to get out of cramped condos and into detached homes because they're working from home and realize they need some extra room?
Yeah, you saw a lot of that shift, obviously. That's why we have record low inventory in the single-family housing market. Never been this low here in Vancouver. And so you basically have a lot of buyers essentially just competing for the same very little product that's on the market. If I look into Vancouver here right now, your home price index for a detached house in Greater Vancouver is up 10% on the year. But keep in mind that home price index is actually a lagging indicator. The way the data is recorded, it actually lags by as much as 6 months. So I can almost guarantee you that in Q1, at some point, you'll probably see 15% year-over-year price growth. And a lot of that is, again, people looking to upsize, and, the people that they would normally be downsizing are opting not to, due to the pandemic. So, I think that's what we're seeing.
Is there an effort to flee big cities in British Columbia and move into the countryside?
Yeah, we still have that suburban still that suburban exodus or suburban wave, sort of, people funneling out of the cities. I think that some of that is starting to reverse course. We're seeing renewed demand and increasing activity from investors now in the downtown market. So, keep in mind that was a market that was basically had gone no bid for 6 or 7 months, and over the last sort of six weeks or so has taken a dramatic shift, and we're starting to see those investors coming back to the market. So it'll be interesting to sort of see how that shapes up in 2021. Obviously, I think there's still some headwinds there with the lockdowns and the weak rental market, but I think a lot of investors are starting to look past that, and are looking at the light at the end of the tunnel.
Mm-hmm. The condo market in the past was driven by speculation, so is that going to happen again?
I think that we certainly run the risk. I mean, I don't think we have a speculative condo market, but I think that when detached prices, again, as I mentioned earlier, are up 10 to 15%, eventually those just get completely out of reach. And similar to 2016, you'll start to see, I think, a reverse where the detached market starts to slow. People are forced into the condo market, and the condo market starts to recoup and close the gap on those price gains. And so I think that's a realistic scenario. I think the big driver, again, is the condo market. The reality is that's where the investors play, right? People go out and buy one bedrooms and they try to make the numbers work and rent them out. And the investors have been very tepid to enter the market. Like I said, they've been recently coming back. And I think that as we get towards closer to the end of this pandemic, and as hopefully, the labor market slowly begins to improve and you get some immigration and population growth back, that I think that, you'll see more and more investors coming in. And again, when you're borrowing at 1.5% and, the value of your currency is being eroded in your face. I mean, Canada's M2 money supply is up more than 15% this year. To me, the answer is pretty easy.
Is there a push for digital currency in Canada?
Yeah, something I've kind of been tracking. We obviously have heard a lot about central bank digital currencies, the IMF, the Fed. So the Bank of Canada is obviously beginning their project. I know that they have some job postings are out right now, looking to hire some people for those programs. I think these guys are well behind the eight ball, so to speak, in terms of where money is going. Obviously, we've seen the rise of Bitcoin and digital currencies and crypto, et cetera. So I think that, the payment systems are obviously being disrupted. I think you can look at the first movers, such as PayPal and Square and what they're doing. So yeah, I think it's interesting. I think that, we're certainly going down that path. It'll be interesting to see, everybody having a digital wallet at the Bank of Canada. Obviously, that gives them more flexibility down the road to implement monetary policy. You can start to use things like behavioral economics. For example, you could see a scenario where hypothetically, they could say, hey, we're trying to spur economic growth. This well-off person has $300,000 sitting in cash on the digital wallet here. Let's incentivize them to spend it. Let's start charging them a negative interest rate. And then on the flip side, you could say, hey, this is a student. He's in his, first year at university. He's only got $5,000 to his name. Why don't we give this guy a 3% interest rate on his savings? He could probably use the help. So, the central bank digital currencies, are certainly very early stages, but, I think they're coming much, much sooner than people realize.
Do healthy stock markets lead to healthy real estate markets and vice versa?
I think that they're all correlated. I think that my opinion is that the economy doesn't drive financial assets. Financial assets drive the economy, and that's obviously been the objectives or the mandates from our policymakers. It's, hey, listen, let's do programs like QE. Let's explicitly increase the value of those assets, and let's hope that by doing so, it will create a wealth effect, and by doing that wealth effect will generate more spending and thus more GDP growth, higher wages, etc. So that's been the explicit target of policymakers, and I think that they're all correlated. I think that as we can see today, I mean, pretty much all aspects of financial markets are doing quite well, despite what's happening in the real economy, where people are losing jobs and businesses are shutting down.
Are the people who have survived and are working, do they tend to look at higher end homes because they can afford them?
Well, I mean, I think that this is the gilded recession, right? I mean, it's I think that people obviously on the higher ups haven't been impacted. In fact, that a lot of them are probably doing better than they were pre-pandemic. And so, I think that, the high end of the market's moving pretty well. I mean, certainly much better than it was pre-pandemic. So,
Steve, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been Steve Saretksy. He's a Vancouver-based realtor. You can find him online at stevesaretksy.com. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. We're also on Facebook. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.